Hey, I heard that, Raj. This is all right. For those of you that are listening in and you are not in the daily, you're not in the chat room, this kind of crap I don't like. I'm just kidding. Raj is great. We were actually talking whiskey last night, single malt and bourbons and a little bit. I had a few moments that I could spare, and now I need to go get monkey's head. No, monkey's shoulder. Monkey's shoulder. Monkey's head. Monkey nuts. Monkey. I forget whichever one we were talking about. I think it's monkey shoulder. Shoulder. Tony says it's shoulder. Okay. Anyway, guys, here's the thing. S&P continues to rally. Okay. We're grinding up this upper trend line. Seen it before. Let's, go to the S&P. How many times have we, been on upper trend line of a, and you see it like here's like, you go for days, right? Just knocking our head up against trend line, however you want to draw it. I guess it's actually drawn like that. So we kind of knew that we could grind up here. The channel resistance comes in a little bit higher than where we're at right now, maybe 41 to 70. I mean, so there's nothing stopping this market from grinding higher. Yes, relative strength is divergent. Yes, the market's overbought. Yes, this and that and the other thing. I get all of it. But the markets are still going up, all right? And until this low breaks, the support breaks through like channel support, or we start actually making lower lows and lower highs, it is what it is, right? So you've got to deal with it. Unfortunately, it's the situation I wish is simple in currencies, because if it was, life would be easy, right? If I could just say, okay, stocks are going up, so I'm just buying the Aussie. I'm just buying the Aussie. So you stocks hit new highs like earlier. You buy the Aussie at 77.50 because you're like, screw it, it's going to break. The stock market's breaking out. I think about an hour ago. Here, yeah, do it like this. That's volatility. Whoops, wrong one. Okay, so you see stocks breaking higher over here, right? And then you're like, okay, well, the S&P is breaking out. I'm going to buy the Aussie. So you buy the Aussie, and you pay 77.50. And then the stock market continues to climb, and then it slams back down to 77, 38. And you're just like, fudge sickles, and then you get out, right? And that, again, it would be nice if we had correlations that haven't broken away. But what we've seen, and let me get rid of this. What we've seen is a lot of correlations break down. And, the FX correlation between the equity markets is broken to an extent. But then what we will see is any type of hiccup in stocks, we see an actually more aggressive move to the downside. Like, I'm just using the Aussie since it's on my screen. So if you put back the S&P here, you see just a little blip lower in equities, you'll get you'll blip lower in equities, you'll get an exaggerated move in the Aussie. Then we start grinding up again in S&Ps, and the Aussie just finally says, all right, screw it, I got to go higher because stocks aren't stopping, right? So it's not as cut and dry if you're trading just FX. It's just not. So that, I just want to make sure that everybody's clear. Does that mean you should ignore FX? Absolutely not, because I'll be the first one, and I know I've said this a lot, but if equities turn lower, dude, FX is going to go crazy. It'll go crazy at some point, right? It will, like, you see equities actually correct a little bit, you're going to see the Aussie come under a lot of pressure. Same with the Kiwi, same with the Canadian currency. probably the the emerging market currencies. I mean, look, the emerging, like you take the dollar Mexican peso today, yeah, it's dropping. Why? S&Ps are at all-time highs, so of course it's going to drop, and it's going to come down into its wedge support. I'm not happy about it, but it's going to happen. So you just got to manage your positions and your sizing correctly, so you can be around to pick it up when it dips to like in this case the 161% extension. Let's get it down there to the 1985 level, and try to pick up a little bit more down here. And if it gets back up towards 2005, you sell some, and then hopefully you have a decent core for when it breaks higher, when stocks actually reverse gains. Does it look like it's going to happen today? Nope. And then if you take other assets, like you have gold is clearly breaking out today. I bought some gold this morning. I bought it on the breakout. I put in a pattern in play too. I didn't get it as good as the price as I did putting the pattern in play, because by the time I was finished doing everything and finagling around, I finally got in. But it doesn't. The point I'm trying to make here is that gold is breaking out. That's another just catalyst, or maybe confirmation that stocks will be going higher. Right? It's just another asset that's moving higher. Chad said, "Death by 1,000 cuts being a dollar bull." It seems it is, or you just you could do this, Chad. Really limit your exposure and just know what we're dealing with. And if you're like, I'm going to play the dollar on the long side, like for me, I am playing the dollar on the long side. I'm very small right now, and I have been, and even like trying to play the dollar Canadian. It was like, right, it was up 100 and some odd pips, and then I end up getting out for a measly profit. But it doesn't. The fact is, I'm waiting a lot, trying to be patient, waiting for this to happen, because I know, like, I know, like if I'm looking at the dollar Mexican peso and this wedge breaks right here, if this is happening while stocks are going down, I know that that's the right trade, right? And so I know I need to be aggressive on the way back up. I know that this move would be, this will pay, And yesterday I was looking at it saying, what, that would have paid if we would have turned yesterday, but it didn't, and maybe it'll be one more day and we're, down here, and the dollar Mexican peso looks like this. And tomorrow it's like, okay, well, if it's back above this price, then that's gonna be the one. So and there's other setups too. Let me share one with you guys that I'm really watching carefully. Is this Canadian yen? And this Canadian yen, this is by the way, I could view this as a head and shoulder pattern too. You could view it as a triangle, like this neckline, head and shoulder, shoulder, head. And the reason why I like the Canadian yen so much, you guys know, I just love how the Canadian is actually performing. I know, and by the way, I bought some earlier this morning, but my price is okay. So what, I'm up 20 or 15 pips right now. It's nothing big, but I still like the way it's performing. That's why I continue to try to pick it up on dips, or trying to play it that way. The one thing I like about the Canadian yen, though, in particular, like this is the COVID lockdown move, 127% extension. This is the highs from September of 2017 to the lows, 78% retracement. I bet, and I haven't done it yet, or maybe I did and just took it off. Let me just double check. Yeah, we're in between fibs there, so it's not so important. But here, 78% retracement, 127% extension. We are starting to make lower highs Let me go over to the lower highs, triangle, head and shoulder, wedge, whatever, relative strength. This is, I'm watching this very carefully because this is, I have a feeling relative strength is going to break before the Canadian, because a lot of times it does. You'll see relative strength break lower, and then that's my cue that we are actually breaking down. Price might actually be down here, but then I'll know that, you know, we're going to take out all this support if relative strength really starts to dip. So that's just, this is one of those pairs that I've really I've been keeping an eye on because it is just not acting well. It's not. And with stocks and S&P higher and every asset class under the moon, it seems like higher, you know, you even have crude oil that's above 63. It's like, you know, why is this trading as weak as it is? You could also argue that, hey, the Canadian yen is way down here at support and stocks are at all-time highs. I should be buying it here because it's going to go back above 87. That is an argument. And that's a valid argument. I will not dismiss that argument. That, well, shoot, you know, if the S&P is going to 4,200 today, why isn't the Canadian yen at least going to bounce back to here? And maybe even higher, right? So I see why it's supported at current levels, like why buyers are down here. There's, from a risk reward perspective, it's actually better to be long than short right now. But I'm not looking for the 30 pip move. I'm looking for the 150 pip move. You know what I mean? That's the one I'm more interested in personally. So anyway, I hope that all makes sense. Amir wanted me to look at Palladium. Oh yeah, strong. Came out of that wedge. I know we had talked about this, supported right where it should be, and you know, here we are at the highs. Well, I mean, hell, if you've got gold moving higher, why isn't palladium, you know, moving higher as well? So gold looks strong. Silver looks like we're going to go to the upper end of that range. You know, silver looks like we're going back to 2670, 2680. So yeah, why wouldn't palladium go up? It's already been strong as it is, right? What else? Let's, you know, really, one last thing. Let's take a look at Ethereum. So Ethereum is really close. I was actually on a call just before this webinar, and I'm still looking at this really carefully. 88% retracement here, basically, you know, 618, 161% extension. This one's, you know, could go 260, you know, but I'd rather play the 161% extension of this. This is that crab. That was the chart of the day, but also channel top, right? Channel top. So we're getting real close to resistance, and notice how Ethereum isn't making new highs. And if it does make one more new high, maybe that's the you know, the level to be a seller if it just makes one more new high. Amir also asked for platinum. This doesn't look so good. I mean, you know, let me just clear all this crap off. I'd be looking at it like that. And I would also be recognizing that it's really underperforming the rest of the precious metals. So because it's underperforming the rest of the precious metals, you have to be respectful of that. You know, because if for some reason we end up getting a false breakout in gold, like I would be very concerned at this point if gold breaks back below 17 like 50, probably like right about that resistance right there. So we dip below like back into the 1750s, I would be worried if I had some platinum. All right. So anyway, guys, Hugo said get Lagavulin. I'll look into it. I'm always interested in some different type of bourbons and whiskeys. Amir asked for PLD. Well, I'll look at it. I don't know anything about it, and it's right up against highs. And relative strength is divergent, but it's not overbought, so we could actually break higher, and relative strength could confirm that move. So, looks good. Looks like I wouldn't want to short it, at least not right now. But you got to be aware of you're up against the spike high, whatever that spike high did. All right, guys and gals. Hey, thank you so much for your support. Say Thursday. Oh, you know what? I was going to tell you. So my COVID vaccination was this afternoon. They canceled it on me. You know, so they canceled it on me. You know, and they sent me an email. Then they called me and said, "Hey, it's closed anyway, or it's closed. It's not available." All right. Talk to you guys later. Bye bye.